Welcome to the Thursday edition of Tech Stocks Daily, where we're diving into today's wild tech ride. First, we've got Microsoft shaking up Wall Street with stellar revenue, yet lackluster guidance leaving investors queasy. Then we'll dig into MicroStrategy's massive Bitcoin ambition with their audacious $42 billion 2121 plan. Lastly, Block Inca enters the spotlight with promising Q3 projections, even as Tidal charts stormy waters with fresh layoffs. Crunch those numbers and join us for expert insights as we unravel these tech titans' puzzling strategies. Let's roll. Microsoft, always the center of attention in the tech world. Today, MSFT is turning heads, and not just with their legendary operating systems. Investors weren't thrilled despite the company's strong first-quarter earnings report for fiscal 2025. Yes, you heard it right. Even when they're up, they're somehow down. Let me break it down for you. First off, Microsoft reported earnings per share of $3.30, beating Wall Street's average estimate of 3.11s, with revenue hitting a cool $65.59 billion. That's about a 16% surge from the same period last year. Their cloud business was flexing hard, with the intelligent cloud segment seeing a 20% uptick and Azure sales climbing an impressive 34%. Even their augmented productivity and business segment wasn't slouching, posting a 12% increase to clock in at $28.3 billion. But here's the twist. Despite these overflowing earnings, like your overflowing inbox after a long vacation, Microsoft's stock took a nosedive, dropping by around 5.4% by the afternoon. Investors weren't humming Microsoft's victory song due to guidance that didn't quite hit the high notes they were hoping for. In particular, Azure's projected growth rates gave the market the jitters, as Microsoft expects only a 31 to 32% rise for Azure in the upcoming quarter, a small step down from the 34% growth just announced. Imagine expecting a party, but getting a small gathering instead. Now don't sound the alarms just yet. Microsoft's foray into AI is stampeding like a herd at a Black Friday sale. The AI business is on track to skyrocket past a $10 billion annual revenue run rate by next quarter, making it the Usain Bolt in Microsoft's history books of rapid scaling. CEO Satya Nadella has been gushing about how AI-driven tools are transforming workflows and revenue streams, and it seems this might lead Microsoft to potentially a $4 trillion market cap within the next 6 to 9 months, according to the ever-bullish analyst Dan Ives. Adding even more spice to the pot, Microsoft stock is featured prominently in numerous exchange-traded funds like the T-Rex 2X Long, Microsoft Daily Target ETF, and the iShares Global Tech ETF. So even if Microsoft stock sneezes, the financial world catches a cold. In the meantime, Microsoft's deepened collaboration with Outbrain via Azure is generating quite the buzz. The integration of generative AI solutions promises to upgrade both Outbrain's and Microsoft's service offerings, marking yet another step towards nimbler ad tech landscapes. So essentially, Microsoft delivered staggering results paired with cast-iron priorities in AI and cloud. But with one sneeze in its outlook, Wall Street caught the financial flu. But like the saying goes, when life gives Microsoft lemons, they make money-making AI lemonade. Buckle up, folks, because MicroStrategy is making waves once again. Today, the spotlight is on their bold move to double down on Bitcoin with an eye-watering investment strategy. MicroStrategy has unveiled its audacious 2121 plan to buy $42 billion worth of Bitcoin by 2027. Yes, you heard right. For 3 more spins around the sun, they'll be on a crypto shopping spree for the king of cryptocurrencies. So what exactly is MicroStrategy doing? They're attempting to raise $42 billion through a combination of $21 billion in equity and another $21 billion in debt. This strategy isn't just about accumulating crypto, though. The company is focused on bolstering what they call BTC yield, essentially measuring the ratio of Bitcoin holdings to outstanding shares as a performance metric. Michael Saylor, the longtime Bitcoin evangelist and chairman of the company, previously spearheaded MicroStrategy into Bitcoin waters, and now it's Phong Lei at the helm as CEO. He stated that using this colossal chunk of capital for Bitcoin treasury reserves would help the firm achieve higher BTC yield, a kind of return on their Bitcoin assets. And get this, they're aiming for between 6 to 10% annual BTC yield between now and 2027. Why does it matter? Well, to put the scale of their ambition into perspective, if successful, MicroStrategy could control around 2.7% of the total Bitcoin supply, equivalent to about 578,586 BTC at current valuations. Yep, they're going for the crypto jugular. Market analysts are having a field day. Benchmark fintech analyst Mark Palmer is positively bullish on this move. His confidence in the 2121 plan translates into a potential $300 valuation for MicroStrategy stocks, higher than his previous target. His optimism banks on Bitcoin hitting a jaw-dropping $175,000 by the end of 2025. Adding it all up, MicroStrategy is set for what some market analysts are dubbing escape velocity, potentially setting itself apart from other public companies, even, dare I say, countries, in Bitcoin holdings. I'm talking about a magnitude that moves the needle nationally. Their stock has also shown some ridiculous growth since 1999, admittedly with some assistance from Bitcoin's gravitational pull. So to sum it up, MicroStrategy's newsmaking plan isn't just attracting headlines, it's shaking up the entire tech and financial landscape. Their plan isn't an endorsement to jump on the Bitcoin train without considering the complexities and volatility of crypto investments. But there's no doubting it. MicroStrategy is fearlessly placing themselves squarely at the future crossroad of digital asset treasuries. If nothing else, today's news makes it abundantly clear. Sometimes bold action speaks louder than words, and it has the world noticing. Today, Block Inc. is making significant waves in the tech world with not one, but two significant updates that might have investors and tech enthusiasts buzzing. First up, we've got a potential bullish trend in Block stock ahead of its third quarter earnings report on November 7th. Block, the powerhouse behind Square and Cash App, stands out as a leading fintech pioneer that has left no stone unturned in the digitization of commerce and banking. It has significantly profited from the ongoing boom in areas like mobile payments, digital banking, buy now, pay later commerce, and peer-to-peer transfers. The upcoming earnings report is one to keep an eye on, as Block has projected some promising numbers for Q3, including a 17% year-over-year increase in gross profit and a 46% jump in adjusted EBITDA. With efforts to tighten costs and escalate financial efficiencies, Block's profitability shift deserves a standing ovation. But let's be real here. While these figures are blossoms in Block's growth garden, the hothouse framing these numbers whispers of slowdown as compared to the performances early in the year. Confidence in Block might hinge on whether they meet these expectations, especially if they plan to win back grumbling investors who've watched stock prices drop 5% this year. But wait, there's more. Over at Tidal, Block's music streaming service, the ship isn't as merry. Jack Dorsey has announced another round of layoffs at Tidal. The restructuring will eliminate roles in product management and marketing, along with a streamlined design team. Cash-conserving Dorsey is arguably pushing Tidal to its startup-era zenith. Tidal, despite its high-profile beginnings with Jay-Z, has wrestled with stiff competition from the likes of Spotify and Apple Music. This wind of change may just be Dorsey's effort to relight Tidal's place in the music streaming cosmos, reducing potential inefficiencies and concentrating on what they do best, even if it means scaling down the ship's crew along the way. Now, this confluence of happenings might evoke mixed emotions. ARK Invest's sell-off and Tidal cutbacks could open caution's gate, even as Block forges ahead with cryptocurrency enthusiasm and fintech innovations. Could Tidal's trimmed-down approach work? Or will this herald more challenges? Could this startup-again strategy at Tidal sprinkle stardust on its fortunes, or fizzle like streamers at dawn? We're only scratching the surface of Block's journey, and now it's time for you to jump in the discussion. What do you think of Block's latest moves? Are you optimistic about their financial outlook, or do the layoff clouds dampen the forecast? Drop your thoughts in the comments section, and let us know where you stand on Block's intriguing blend of opportunity and challenge. Would you put your chips on Block for a prosperous comeback, or do you foresee stormy seas ahead? Share your insight, and let's get this discussion buzzing. All right, let's dive into MicroStrategy, because wow, they've really thrown a party in the Bitcoin stadium with their bold new 21-21 plan. They're essentially saying, look out, Bitcoin world, we're coming for a slice of the pie, and we're bringing a $42 billion fork. That's some next-level commitment to cryptocurrency. So what should you do with MSTR? Sell, buy, or hold? Here's the play. I'd lean toward a buy with cautious optimism. Here's why. MicroStrategy's aggressive move to strengthen its Bitcoin position indicates they have high confidence in the cryptocurrency's future value. Michael Saylor, and now together with CEO Phong Lei, seem hell-bent on turning MicroStrategy into a juggernaut in Bitcoin holdings. If you're bullish on Bitcoin and believe it'll continue its moonbound journey, this aligns perfectly with MicroStrategy's strategy. They're not just fiddling around, they're betting big, focaling, aiming for a 6 to 10% annual BTC yield. If Bitcoin flares up anywhere close to the $175,000 value some analysts predict by 2025, MSTR could see substantial appreciation. Of course, we're talking about crypto here, where volatility is the wild card at every hand. This plan's success depends considerably on Bitcoin's price stability and upward trajectory, as well as MicroStrategy's ability to manage their audacious purchase without striking a financial iceberg. That being said, buckle up for a bumpy ride. Consider MSTR if you're comfortable with volatility and share an optimistic view of Bitcoin's future. However, this doesn't come without risk. And remember, before diving in, make sure to do your own due diligence. Look at market conditions, evaluate financial trends, analyze your risk tolerance, and possibly consult with a financial advisor. Never invest based on just one perspective. Happy investing. Wow, what a day in the tech market. Microsoft wowed with revenue dynamite and AI excitement, but tripped investors with lackluster guidance. Meanwhile, MicroStrategy went full throttle on Bitcoin with their blockbuster 21-21 plan, and Block Inc. hit both highs in fintech and lows in Tidal restructuring. It's a roller coaster for sure. If you enjoyed today's tech rundown, don't forget to like, subscribe, and share the video with your fellow tech enthusiasts. Stick around and see you tomorrow for another thrilling dose of tech news.